Today, I'll try to figure which side is right by using the most accurate method to value a company, the discounted cash flows. I'll show how many cars will Tesla produce by 2030, I'll find the true intrinsic value of the stock, and what would Tesla need to do for the stock to grow 100%. Moreover, I'll place the full valuation in the description so that you can insert your own assumptions and see how the price changes. You see, although this is one of the most complex valuation methods, there are only two inputs that we need to get right in order to value Tesla correctly. And the first input is the revenue growth. Since the automotive represents 83% of Tesla's revenue, I'll spend most of the time on the automotive segment, and I'll start with the United States market. I expect the total auto market to grow at a 6.6% CAGR between 2023 and 2030. Next, I expect the electric vehicles market penetration to grow from 5% in 2023 to 50% in 2030, but more important than the EV adoption is how much of the market share can Tesla maintain. I expect Tesla to maintain a 2030 market share of 30% for the base case and 35% for the bull case because of new entrants on the market. Even if Tesla has the first mover advantage and owns around 2/3 of the market at the end of 2022, I expect this to decrease with a small bump in 2026 when I expect Tesla to launch its low-cost model, Model 2. As a result, I expect Tesla to sell around 3.6 million cars in 2030 in the US with an average selling price of $30,000. The average selling price will drop significantly starting with 2026 when Model 2 will hit the market. There are two ways in which Tesla can provide upside potential post-2027. Either a market penetration for battery vehicles bigger than 50% or for Tesla to keep a market share bigger than 30%. Next, China is the second biggest market as it represents 22% of Tesla's revenue. China is also the biggest EV market in the world and leads the transition towards electric transportation. Firstly, I assumed that the total auto Chinese market will grow at a CAGR of 4% by 2030. The battery electric vehicles, which is hybrid and full electric vehicles, adoption rate will grow from 26% in 2022 to a phenomenal 75% in 2030 as government measures represent a strong tailwind. Still, for the base case, I chose to be as cautious as possible and I assumed Tesla's market share around 10% with a small bump in 2026. This leads to a total of 3.1 million Tesla cars sold in 2030 in China. I expect the launch of Model 2 to be a true catalyst for the Chinese market as Tesla is currently lagging because of better low-cost alternatives. For the rest of the world, I assume Tesla's growth will slow down from 32% in 2022 to 25% in 2030. The growth will be led mostly by Europe, where governments have set really bold objectives. Summarizing the total car production for 2030, I expect Tesla to sell around 9.7 million vehicles. The US will probably remain the biggest market with 3.6 million, while China and the rest of the world will both contribute around 3 million cars. Another crucial business unit is the energy generation and storage, which grew around 150% in the first quarter of 2023 and expected to continue to grow nicely until 2030. This will generate a revenue of $45 billion in 2030. Next, for the leasing, regulatory credits and services, I assumed a decreasing revenue growth rate that will lead to $59 billion in 2030. Based on these assumptions, I believe that Tesla can achieve around $400 billion in revenue in 2030, with around 74% coming from the automotive segment. Besides the revenue growth, there is one more important metric that will decide the value of Tesla stock. You see, in a low margin, high turnover industry, the gross margin is paramount. Tesla had one of the best gross margins in the industry at the end of 2022, but it decreased significantly following the recent price cuts. I expect the automotive margin to remain below the historical high, firstly because of lower prices and starting with 2026 because of the launch of Model 2, which will lower the gross margin. I expect to see the biggest improvement in the energy generation segment, reaching a 20% margin in 2030. Tesla kept its operating expenses in check really well and I expect it to continue in the future. As a result, I expect the adjusted operating margin to slowly grow towards 19% in 2030. Lastly, the most important element is the unlevered free cash flow, which I estimate to be around $56 billion in 2030. Lastly, taking all this into account, I believe that for the perpetual growth method, the Tesla stock price is around $250, while for the multiples method is around $213. Taking both methods into account, I estimate that the true intrinsic value of the Tesla stock is around $230. However, this price takes into account my conservative assumptions. I have also imagined a bullish case where Tesla produces around $12 million cars in 2030. In this scenario, the stock is worth around $350. Tesla will need to maintain a 35% market share in the US and 15% in China, in conjunction with an EBITDA margin of 26%. But besides my assumptions, it is more important to look at the risks and try to figure out where I could be wrong. Firstly, there is a big macroeconomic risk that the US will go in a severe recession. This model assumes that a big economic shock won't happen this year. Other significant risks Are competition getting more intense in the US, leading to Tesla losing market share much faster than anticipated, or Tesla not launching its Model 2 before 2030 because of manufacturing failure? Lastly, the adoption of EVs might be much slower than anticipated, especially for the US. Lastly, let's consider the bear case, which is the scenario where Tesla only manages to sell around 4 million cars in 2030, as Tesla will only have 10% of the US EVs market and 5% of the Chinese market. These, in conjunction with only a 7% EBITDA margin for 2030, would put the stock around $49. To sum up, I believe that even when using conservative assumptions, Tesla stock is still undervalued. However, since I don't hold a crystal ball to have all the correct inputs, I believe that the true intrinsic value of Tesla stock is around these values, depending on the perpetual growth rate, the multiple used, and the weighted average cost of capital. I like the company a lot, and I believe that its execution has been phenomenal. Next, I will be doing a complete financial analysis of Tesla, and I will show what my price targets are for buying the stock. Until next time, keep crushing it and subscribe.